Welcome back to the Web3 Daily. Today's market opened with a bit of heat. Bitcoin made a push up to 122, just a half a step from its all-time high, with bulls and bears eyeing each other, fingers hovering over the close button. Ethereum held even firmer, sitting solidly at the 4.3K mark, with ETF inflows still pouring in. BlackRock's spot ETF pulled in over 600 million yesterday, the kind of size that directly warms sentiment. Among the hot movers, Solana surged past 170, tanked up on the Coinbase Ventures news, while Memecoin hype faded, PEPE fell about 7%, and the Dogecoin slipped too. Overall, the mood stays bullish, but the all-out everyone piling in energy from last week has cooled a bit. Capital is now picking targets instead of spraying everywhere. The 10K Ethereum narrative has been pushed to the center of discussion by a mix of voices. First, Aaron Bennett said in an interview that this round's structure feels more solid than previous cycles, with lower volatility risk, and under these conditions, 10 could come quickly. His logic ties the technical setup to the low-risk state and jumps straight to a psychological milestone. Head pillows lit the match with a sharper take. Ethereum is a 10K coin selling at 3.5K, dropped on social media. That line isn't about debating logic, it's about cranking up the urgency, giving you that miss it and the regret forever pressure. Technical voice, X-Force, Global, mapped out a 9K, 10K mid to long-term target using Elliott waves. His tone was more measured but still added a caveat, no strong macro catalyst yet. So this is more of a technical roadmap. Miles Deutscher put a data quote on it, saying his AI model gives ETH an 18% chance of hitting 10K. Sounds more rational, but it's another form of flag planting. Put together, it's like sitting at a table with four very different friends. One pulling you to all in, one painting the horizon, one sliding you the chart to think for yourself, and one giving you a probability nudge. The result is sentiment gets a jolt, bulls press harder, shorts pull back, and the market's mood gets a shove. But behind the heat lies the flip risk. If ETH doesn't break key zone soon, that optimism can turn into a rush for the exits. What will really decide if we see 5 figures isn't tweet likes. It's whether ETF inflows can stay strong for weeks, and whether yields and the dollar index flip. If those line up, the calls aren't just noise. If they don't, the market will show just how far reality can be from the hype. The first news is about Western Union acquiring Ripple partner Intermex. It's a $500 million all-cash deal, expected to close by mid-2026. Intermex is one of Ripple's on-demand liquidity ODL. Partners ODL uses XRP as a bridge currency for cross-border payments, enabling near-instant settlement and lower costs by buying Intermex. Western Union is basically getting a ready-made blockchain cross-border settlement channel. Intermex focuses on North America and Latin America, especially the US-Mexico remittance corridor, handling 6 million transactions a year and running a massive agent network. Pair that rich with Ripple's tech, and it's a fast track for Western Union to move from traditional rails to blockchain-based payments. Western Union has long been cautious on blockchain remittances, so directly buying a Ripple partner signals a real shift toward embracing crypto payments. Market read: this acquisition could significantly boost Western Union's speed and cost efficiency in cross-border settlements while solidifying its dominance in Latin America. For Ripple and XRP, it's a clear positive when a traditional finance giant integrates your tech into its core business to move actual money. It's going to increase real-world usage of XRP in cross-border payments. Second news is Coinbase Ventures joins TON, and this could be a real accelerator for the entire Telegram-linked ecosystem. 10 Foundation announced that Coinbase's venture arm is now a Toncoin holder. They didn't disclose the amount, but this comes after Sequoia, Benchmark, and Ribbit Capital all directly bought Toncoin. 10's backstory is well known. It started with the Telegram team, later handed off to the community to launch the mainnet, and has been embedding on-chain apps into Telegram's billion user base. Decentralized wallets, mini-games, bot services, etc. In recent months, 10 rolled out domain services and decentralized storage, with both activity and user numbers rising. Coinbase Ventures joining means TON now has not just the traffic gateway, but also a potential path into the US market and regulatory positioning. Market Red has 2 key points. First, Coinbase is holding the token rather than taking equity, which aligns incentives directly with the token price. If the project grows, the institution's returns show up immediately. Second, Coinbase's brand gives TON more credibility to attract exchanges and developers, especially in North America, speeding adoption much faster than before. After the announcement, 10 spiked to around 3.4 before easing back, but community sentiment was clearly fired up. Third news is White House crypto advisor Hines stepping down, marking a small pivot in U.S. digital asset policy. Hines, appointed in January by President Trump as the first executive director of the Presidential Digital Asset Advisory Council, spent just 8 months in the role but was instrumental in advancing key policies like the Genius Act, the first federal stablecoin regulation law in the US, defining issuance licensing and reserve requirements, and helping coordinate new rulemaking for security tokens and exchanges. His departure officially to return to the private sector and mount another congressional run also means the White House crypto policy team is getting a new lead. Deputy Patrick Waite is expected to take over, and he has been deeply involved in policy work, so the overall direction isn't likely to shift much. President Trump remains openly pro-crypto, even hosting the first ever White House Crypto Summit last week, and pledging a friendlier regulatory environment. Market reaction was calm. Bitcoin and Ethereum both held steady to slightly higher on the news. Analysts say that's because much of Hines' policy framework is already in execution, so a personnel change won't immediately slow things down. Still, some worry the new lead may not push as aggressively, especially in urging the SEC to ease up on digital asset oversight. Overall, the move is more about political positioning than market impact, but it's a reminder that US crypto policy is still shaped by political cycles and personnel shifts. Fourth news is Ethereum ETF sees record single-day inflow with institutional buying power on full display. On August 11, US Eastern Time, BlackRock's spot Ethereum ETF, iShares Ethereum Trust ETA, took in 168 ETH in a single day, worth about 641 million at the time, its largest daily inflow since launch. On the same day, all US spot ETFs combined saw over 1 billion in net inflows, with Fidelity and other asset managers also posting strong numbers. The backdrop: earlier this month, President Trump signed an executive order allowing 401k retirement savings plans to allocate to digital assets, including crypto. This opened the door for institutional and regulated capital. CoinShares data shows that in the 2 days after the announcement, 1.57 billion flowed into various crypto investment products, with a large chunk going into Ethereum-related funds. This steady influx has helped push ETH higher, breaking 4.3k and edging closer to its all-time high. Market read: this kind of capital is very different from retail speculation. It's slow money aimed at long-term allocation, which once in place tends to reduce sell pressure in the market and provide medium-term price support. It could also accelerate ETH's inclusion in more institutional portfolios, putting it on par with Bitcoin as a mainstream investment asset. That said, the flip side is that if inflows slow or policy momentum stalls, sentiment could cool quickly.
Fifth news is Trump signs executive order to ease 401k retirement fund restrictions on crypto investments, a heavyweight policy win. Until now, most US 401 plans were limited to traditional assets like stocks, bonds, and funds, with crypto largely excluded. This order officially opens the door, allowing plan administrators to add digital assets such as Bitcoin and Ethereum ETFs and regulated crypto funds to their menus. Behind it is a 9 trillion retirement savings market. Even a 1% allocation would mean 90 billion in new crypto capital. The market reacted within 2 days of the announcement. CoinShares data shows 1.57 billion flowed into crypto investment products, reversing prior net outflows. Ethereum benefited most, with ETF inflows hitting records and its price pushing above 4.3k. Bitcoin broke 121k near its all-time high. Industry analysts say the policy will expose more traditional institutions and individual investors to crypto by default, accelerating mainstream adoption. In the long run, the steady, long-term nature of pension capital is bullish for market stability. But in the short term, if implementation rules tighten or regulatory pushback emerges, sentiment could swing quickly. Sixth news is Nasdaq-listed VivoPower scoops XRP at deep discount, a bold move in cross-sector investing. The company announced a $100 million purchase of Ripple Labs equity,
indirectly acquiring about 211 million XRP at an effective cost of 0.47 per token compared to today's 3+ market price. That's like buying with an 86% discount and leverage in reverse. VivoPower's core business is clean energy solutions, with no prior direct ties to crypto. This deal was structured as an OTC purchase of shares from existing Ripple shareholders, which entitles them to a proportional slice of Ripple's massive XRP reserves. Ripple originally held 100 billion XRP, most locked and released monthly. This transaction effectively transfers rights to 211 million XRP from that pool to VivoPower. Chairman Kevin Chin called it part of the firm's crypto treasury strategy aimed at optimizing capital allocation and boosting shareholder returns. They plan to hold the XRP long-term and as Ripple shareholders engage in future business lines such as the ILUSD stablecoin and the cross-border payments. This equity plus token approach offers more involvement than just buying on the open market while lowering acquisition cost. In the market, the XRP community sees it as bullish, a sign that after the corporate Bitcoin treasury wave, XRP is starting to be treated by traditional companies as a reserve asset. Still, others warn of risks crypto's volatility can ripple through earnings reports and share prices, especially if the market turns. Closing thoughts, today's market still feels like the bull trend is intact, but it's shifted into a pick your spots, pick your assets phase. Bitcoin and Ethereum remains a core place for institutions and capital, with ETF inflows and policy tailwinds still pushing, but meme and sentiment coins are cooling off. The 10K ETH narrative got amplified by voices from very different camps, pushing sentiment high on the news side, from Western Union buying a Ripple partner and Coinbase Ventures backing 10, to US policy easing and institutional flows surging. Both ETH and XRP saw tangible positives. Looking ahead, the focus is on whether these positives can keep delivering. Will ETF inflows stay strong for the next few weeks? Will the 401 policy shift bring in more long-term capital? And will traditional institutions and companies make new moves into crypto? Those are the hard supports for a steady climb. When the market's at highs, don't let sentiment run your play. Watch the data, watch the structure, and keep some room for yourself.